Welcome. In this short walkthrough, we will run a construction project from start to finish, entirely inside ERP Next. This screen is the project itself, our central hub for the whole job. This is the Kilimani residential block, a small apartment block we are building in Nairobi for our client, Kilimani Heights Developers. Everything the site does hangs off a few numbers we set right here. The contract value is 8.5 million shillings. We hold back 5% of every payment as retention, which is money the client keeps as a guarantee, and we recover a 10% mobilization advance as the work proceeds. You set these once and every certificate downstream uses them automatically. Before any billing, we price the job. This is the bill of quantities, or BOQ. Think of it as the full price shopping list for the build. Every item of work, grouped into sections like substructure and finishes, each with a quantity and a rate. On a construction job, the BOQ drives everything that follows. Notice each line carries a cost category, and the app rolls them up for you at the bottom into material, labor, plant, subcontract, and overhead. Here, the whole project prices out to exactly 8.5 million shillings, matching our contract value, so we know the job is fully covered before a single certificate is raised. Now to the heart of construction billing. Each month you certify how much work has actually been done and bill your client for that slice. The document that does this is a progress bill, also called an interim payment certificate, or IPC. This is our certificate for this month. Watch how the certificate works itself out. The project is now 30% complete, so the cumulative value of work done is 2.5 million shillings. The system already knows we certified 1.7 million last month, so the work for this period is just the difference, 850,000 shillings. From that, the deductions happen automatically. Retention is held back. The mobilization advance is recovered a little at a time, and what is left, 722,500 shillings, is the net amount payable on this certificate. You did not calculate any of it by hand. And here's the payoff. Certifying the progress bill raised a normal ERP Next sales invoice to our client for that net amount. This is native accounting, with nothing bolted on. So the books balance themselves. On the general ledger, our client account is debited and the construction income account is credited. That is double entry bookkeeping done for you the moment the certificate is approved. Let us look at retention on its own, because it matters on every construction job. Retention is a small slice of each payment the client holds back as a quality guarantee. Look at last month's certificate. 85,000 shillings was held back here. This month held back another 42,500, so across the job the app has now accumulated 127,500 shillings of retention, tracked for you automatically. That money is released back to us later, once the building is finished, handed over, and the defects period has safely passed. Big jobs are never built by one company. We have given the electrical works to a specialist subcontractor, Sparks Electrical. This is their work order, the agreement that fixes their price at 1.2 million shillings with their own retention, advance and tax terms, exactly like our contract with the client. And this is how we pay them, fairly and on progress. This payment certificate values their work so far at 40% complete, 480,000 shillings. From it, the app deducts their retention, their advance recovery, and Kenyan withholding tax, leaving a net payment of 384,000. The same discipline we apply to our client, we apply to our subcontractors. Away from the accounts, this is what happens on the ground every single day. A site daily log is your site engineer's diary. Each day they record the weather, the crews on site, the plant that was running, and a short note of what actually got done. Today 30 workers were on site across several trades, and the app totals the headcount and the labor cost for you. Over the week, these daily logs build the true story of who was on site and what it cost, and they feed straight into the management dashboard we are about to see. Finally, everything rolls up here, into the construction executive dashboard, your single management view. Along the top, one active site, a contract value of 8.5 million shillings, work certified to date of 2.5 million, and retention held of 127,500. Below the cards, the progress billing trend shows what we have certified month by month, and the site manpower trend shows the crews on site day by day, both updating themselves as you work. To recap, you price the job once in the BOQ, certified progress each month with retention and advances handled for you. Pay your subcontractors on the very same basis. Log the site each day and watch it all come together on one dashboard.